Hello, ahead on the marketplace this Friday afternoon, some minority MPs demand reversal of government's move to acquire AIRTEL Tigo, insisting the decision is not in the interest of Ghana. We will analyze. Also coming up, government indicates new policy initiative rolled out for housing sector will help deal with ownership challenges. Plus, World Bank board approves $250 million to support establishment of Development Bank of Ghana. We will tell you what we know. Thanks for being with us this afternoon. Details right after this break. Welcome back from that break. Government has indicated a new policy initiative rolled out for the housing sector will help deal with the ownership gap issues. The National Mortgage and Housing Finance Initiative is expected to provide more affordable housing schemes and flexible financing options for Ghanaians to own homes. Acting Director of the Financial Sector Division of the Finance Ministry, Samson Aklego, disclosed this on PM Express Business Edition on JoyNews. Meanwhile, the Finance Ministry, together with the Works and Housing Ministry, has launched another initiative that will allow workers own homes through a renting approach. Mr. Aklego has been giving us more details about this.
About the lower segment of the economy. And, we did a sample with the civil service salary structure, and it was very revealing. We realized that, look, even if you drop mortgage interest rates to base, the current market rate is around 24 as we speak. In 2019, it was 28. When you even intervene and break it down, it will, for the civil service, still about 70% of them will not be able to take the mortgages. That is why we came up with the other model called the rent to own. In the mortgage system, you front load down payment and pay the interest over time. In the other one, what we have done is that we have reversed it. So you have backloaded the equity interest, like what I got to know that TDC was doing in the past. But except that now we are trying to create a whole institutional framework around it. So what we have done, which is working also, is that you have a rent-to-own scheme that every Ghanaian, now we're starting with public sector workers, but the principle is that every Ghanaian who wants to own a home can start by renting, and maybe after 15 years, then you can pay some money based on residual this thing, and then you own the house. And the high-rise buildings that we have at the TDC 26 affordable enclave is working for teachers and nurses. So now what we need to do is to really study the framework and see how we can broaden it. And if we're able to do that, especially with the price point for the houses that TDC has built, I can tell you that we can support an enormous amount of the middle segment of the population with high-rise buildings. And then the concept of first home ownership and moving on to second home ownership, all those things will become a reality.
Now, some minority MPs are demanding a reversal of government's move to acquire AIRTEL Tigo, insisting the decision is not in the interest of Ghana. Kumbungu MP Rasmu Barak, who serves on the Communications Committee of Parliament, says government has no business acquiring a company that is making losses and has liabilities of almost 1 billion Ghana cedis. He says there are better alternatives to protect jobs rather than government taking over the company, adding that government should not be taking such a major decision only a few days to the next elections.
Government has showed gross disrespect to the Ghanaian public. I am disappointed that Ghanaians had to hear this first from India by virtue of the fact that AIRTEL is listed on the Indian Stock Exchange, and by Indian law they are they are required to make such things public. So the news broke out in India, and it filtered through into Ghana. A couple of days after news broke out, government has still not, respected Ghanaians enough to tell us what it wants to do on behalf of the Ghanaian public. And I think that is completely unacceptable. And I think that we should demand nothing short of a full disclosure on details of the deal, because you are acquiring a company that is not doing well, a company that is on its knees on behalf of the people. And in doing so, the people have a right, and you as government have a duty to let the people know what the details are. But let's get into some very specific issues. We all know that the marriage between AIRTEL and Tigo wasn't really going well, for which reason both parties, AIRTEL was very unhappy, Tigo was very, very unhappy. Now government going in to acquire 100% shares means that government becomes a referee through the National Communications Authority and a player, and that brings about unfairness in the field, because there are other private sector organizations who are doing business. If government is to be the referee at the same time the player, they may end up nudging other companies out of business, and that could result in job losses, that could result in collapse of businesses. Now you also have,
that's exactly why they say they are
I'll get to that. You also have a situation where government at the time they sold off Ghana Telecom indicated to the good people of Ghana that government had no business being in the telecoms industry. If government has money to buy the liabilities, to buy AIRTEL and also to take care of the liabilities of AIRTEL Tigo, one would expect that they would first deal with the situation at hand, which is to fulfill its contractual obligations with Vodafone, inject some capital so that Vodafone can expand and grow, and by expanding and growing they can employ more Ghanaians. They haven't been able to do that.
Well, so government earlier this week confirmed reports that it is at an advanced stage in discussions with BHARTI, AIRTEL and Tigo for the transfer of AIRTEL Tigo shares to government along with all customers' assets and agreed liabilities. Now, this is after the Indian-owned company announced its exit earlier in the week. So what does this mean for the telecom space? Joining me to discuss is Ghana Director of CAS International, Appiah Kusi Adumako. It's great to have you this afternoon. So BHARTI AIRTEL says its exit is to take care of key markets in Africa, but we're also getting a sense that they were struggling a bit here in Ghana. What do you think was not working right for them?
Very much. I think the main problem with AIRTEL Tigo has been the fact that when the two firms merged, there wasn't enough liquidity to be able to invest in the market to expand their share of the market. And this sector is very, very competitive in the sense that if you don't have resources to invest and others are investing, that firm that's investing is will be able to get all the shares of the market. And that has been their problem right from day one.
Okay, and so now government has confirmed that it is taking over the shares. There are indications this is a temporary move, but is it an option government should be taking to make this permanent? Should they consider that?
I think government has become the last resort for this particular disaster in the market, because no business or any firm would want to come and rescue a firm with huge liabilities on its book. And of course, that's thought to the government. And government also has a public policy rationale for coming in to save the company, to acquire the company. One, already we know that the telecom market is gradually tipping to the side of MTN. And should we allow AIRTEL to go down the drain, what it means is that most subscribers will go to will flip to Vodafone and AIRTEL Tigo. And currently, their network will not be able to take the load of the new subscribers that will move from AIRTEL Tigo to Vodafone or MTN. So the best thing that government needs to do is to ensure that we don't run the risk of having a network overload in the short term. And number two, government also has a national security, and sometimes government has to put public policy rationale beyond business decisions. And I think public policy rationale might probably inform government decision in acquiring the company than business decisions.
So the minority in parliament seems to think government has no business taking over the shares of BHARTI AIRTEL. You had the minority MP there, Ras Mubarak, speak to that. Do you think he has a case?
Yes, I mean, the fundamental issue from economics is that government has no business in doing business. However, we also know that whenever there's a market failure, government has to step in. I mean, the US, for example, in 2008, when the financial crisis came, the federal government bailed out the businesses. And these businesses were wholly owned by the private sector. And if government had withdrawn their support, most of these companies would have collapsed, and its effect on the economy would have been very, very catastrophic. So government, you do the cost-benefit analysis and weigh which decision is the best. Of course, they allow Fannie Mae to collapse, but then for AIG, Bank of America, and General Motors, the federal government bailed those companies. And I think the core by the minority, I think, is not the best. We should allow government to government to drop in the parachute to save the company, and then after some time and government has invested in, and then there is enough enterprise value for the company, then government can decide to exit the company and float the shares on the Ghana Stock Exchange. Okay,
I guess, one of the concerns is got to do with mismanagement, as we have seen in the past when government has had to take over something of the sort. So I guess that is the issue that the minority wants to raise there. But let's move away from that and talk about what that, or how that changes the dynamics in the telecom space now that BHARTI AIRTEL is exiting, government is taking over the shares. What do you think is going to be the future of the telecoms market here in Ghana?
Currently, the telecom market has been bedeviled with challenges. We've had Casapreco leaving the market. We've had Glo also facing some challenges. And Vodafone is not also making profits since 2009 when they entered the market. And AIRTEL too is also not making profit. The only profit making firm is MTN. And that tells you that there is something fundamentally wrong with our telecom market that we need to resolve it. High cost operation has been the main challenges facing these companies. Until we are willing to confront it, I think that the telecom market will tilt to one firm, and that firm will be a monopoly. And we all know that whenever there's a monopoly in the market, consumers don't get the best out of it. So I think government needs to do a full landscape study of the telecom market, and then once the report comes, the government will be able to address the issues that emanate from the study.
My final question would be what you think would be the game changer going forward. After government has taken over the shares, what should be the way forward in determining the future of AIRTEL Tigo?
I think once government takes over the shares of the company, government needs to, of course, government is not taking the shares, government is also taking its liabilities. After you've taken the liabilities and you've taken over, you need to invest to bring the company to a level that can be able to compete with the other parties, other players in the market. And once you get to that level, then people will see that, well, the company has moved from negative to positive. And then that will also drive even foreign investors to come and even acquire part of the share. I think that should be the government interest, because government should not run this thing as a normal state-owned enterprise, because this telecom market is very dynamic. And if you don't have a foresight in it, you crash yourself out, like it has happened with, other two players that I mentioned, Casapa and then Glo.
All right. Apia Kusi Adumako, always a pleasure to speak to you on the marketplace. Thanks very much. That was Country Director of CAS International, sharing some perspective on BHARTI AIRTEL's exit and the fact that government is taking over the shares of that company in AIRTEL Tigo. Let's move away from that, bring you some other news we are following for you. The World Bank Board of Executive Directors has approved $250 million from the International Development Association to support the establishment of the Development Bank of Ghana, DBG, to increase access to long-term finance and boost job creation for 10,000 enterprises in key sectors, including agribusiness, manufacturing, and high-value services. The Ghana Development Finance Project is expected to increase the number of viable micro, small, medium enterprises, MSMEs, with access to long-term financing. It will provide financial services to about 10,000 enterprises, including 2,000 women-led MSMEs, and therefore contribute to economic growth and diversification. The project will also strengthen the oversight of development finance institutions and the adoption of environmental and social standards by financial institutions. In a statement, the World Bank said the DBG will finance multiple interventions to attract private sector financing for credit-constrained MSMEs and small companies based in Ghana. Profit margins of some banks fell in the third quarter of this year due to the impact of COVID-19 on the operations. Consolidated Bank and Cow Bank witnessed some dip in their earnings, though Societe Generale recorded a marginal increase in profit. Charles Nixon Yabua has been analyzing the unaudited financial statements of these banks and has more.
Consolidated Bank Ghana and Cow Bank witnessed some drop in their income as earnings fell by 68% and 3% respectively in the first 9 months of this year. There were mixed performances from the various income lines as Consolidated Bank grew its fees and commissions but witnessed a decline in its trading income, indicating very little activities with regard to export financing and foreign transfers during the period. Cow Bank also registered a drop in fees and commissions because of the low activities in loans and advances during the period, but its trading income more than doubled. Both banks boasted of a strong balance sheet, that is assets and liabilities, with Consolidated Bank registering a 7.9 billion cedis worth of customers' deposits. On the other hand, Societe Generale registered a 13.4% growth in income to the tune of 93 million cedis for the first 9 months. The growth in earnings was due to a reduction in loan losses and growth in interest income as well as trading income. But its cost-to-income ratio, a measure of cost in relation to income, was relatively high. For the stability of the three banks, all the financial soundness indicators were pointing to the right direction as non-performing loans were low, far below industry average of about 14%. They were highly liquid and robust as customers can easily redeem their savings and investment.
While speak of COVID-19 impact, let's turn to the music industry. Popular gospel musician Dinah Hamilton says, contrary to the popular assertion that COVID-19 has dealt a great blow to the music industry, she rather leveraged technology to make significant gains. According to her, she's witnessed more deals amid the pandemic as compared with previous years. Here's our maiden edition of Celebrity Business with host Odilia Ntiamwa.
The chamber has come up with 9 indices.
Dinah Hamilton doing well for herself, venturing into fashion too, and that's some Friday inspiration for you. Stay tuned, we are going for a short break. I'll be here to wrap up afterwards. Told you I'll be here to wrap up. This has been The Marketplace. More news on our website, myjoyonline.com/business. Keep up to date throughout the weekend. Do enjoy your weekend. My name is Daryl Kwao. Up next is the election brief. Stay tuned.